Subscribe to LearnCap and hit the bell icon to get notified.
One of the things which bothers the students actually here at this examination level, my dear soldiers, is the aspect of what you can say the CARO 2020. Okay, CARO 2020. Now, one of the area where students find it challenging is the area of CARO 2020, Companies Auditors Report Order, and I have brought this a 10-minute discussion how in 10 minutes we can just do a summary reading of CARO 2020. Are you going to teach us in depth about the CARO 2020? Answer is no, but it's more of a memory technique actually here, which I use because many students they keep asking me that, sir, how do I remember CARO 2020? So this is more on a memory point of view and not on the point of view that to make you understand the entire concept, in-depth understanding. No, that is not the thing here. And CARO 2020 is relevant for both for CA intermediate students as well as the CA final students as well. So how do I remember this actually here? What do I do to remember this CARO 2020? More on a memory technique. Now, first of all, you remember that CARO has got 21 clauses are there as far as the CARO is concerned. Okay. So what I have done is that I have changed these clauses to the mnemonic actually here. In a mnemonic form, I have given this actually. Now, first of all, you have the clause 1, which talks about property, plant, equipment, and intangible asset. Then second clause on inventory. Third on the loans and advances given, investments made, guarantees provided, securities provided to SAG and other than SAG. Now, what is SAG? Subsidiary, associates, and joint venture. Subsidiary, associates, and joint venture. And next one, leaks to section 185 and 186. Now, leaks is nothing but the full form of leaks is what? Loans and advances given, investments made, guarantees provided, and securities provided. So, if you see the mnemonic, the first mnemonic word for the four clauses is PILL, P-I-L-L. You can remember this way, P-I-L-L, PILL. So, in property, plant, equipment, and intangible assets, just to give you in a brief, first of all, are they maintaining proper records for property, plant, equipment, intangible asset? Whether physical verification of property, plant, equipment is done at a reasonable interval by the management. Is there a material discrepancy? So they talk about the material discrepancy, and also they talk about the revaluation of asset. And is it done by a registered valuer? Is that person a registered valuer who is doing the revaluation of asset? And whether there is any change of 10%, and whether the title deed of the immovable property, whether it is in the name of the company. Further, also whether any proceeding is pending or any proceeding has been initiated under the Benami Transaction Prohibition Act of 1988. So these are the few things actually. But remember the mnemonic pills. Inventory, are they doing physical verification at a regular interval? Is there a material discrepancy of 10% or more? And if the company has taken a working capital limit, that is OD and CC, which is more than 5 crores, then in such case, whatever statement they have submitted to the bank and financial institution, are they matching with the books of account? And then leaks like loans and advances given, investments made, guarantees provided, securities provided to subsidiary, associate, joint venture. SAG means subsidiary, associate, joint venture, and other than SAG, subsidiary, associates, and joint venture. So what the clause 3 talks about, whether loans and advances are given to subsidiary, associates, joint venture, investments are made in them, guarantees are provided, securities are provided to subsidiary, associates, joint venture, and other than subsidiary, associates, and joint venture. Here we talk about that whether the terms and conditions are prejudicial to the interest of the company, whether reasonable steps are taken if the amount is overdue for more than 90 days, whether any loans and advances are given on a demand basis. For example, a holding company giving to a subsidiary company. Now, those issues were not captured earlier. Now it has been captured, my dear soldiers. And then the clause 4 talks about leaks under section 185, 186, same as clause 3. But here, have you passed the board resolution? Have you complied with all the requirements? Actually, there's a limit that you cannot make leaks, that is loans and advances, more than 60% of the paid up share capital and reserves and surplus. So whether those requirements are satisfied or not. Mind you, again, I'm telling you, this is only to increase your memory. We are not having any in-depth discussion. Then the second mnemonic which you can remember is accurate. Accurate. First is pills, property, plant, equipment, intangible assets, inventory, licks to SAG, other than SAG, then licks under 185, 186. Now accurate, accurate. This is the thing. This is the second mnemonic which you can follow to remember the clause number as well as accurate. First of all, AC, acceptance of public deposits. Acceptance of public deposits. And then you have the cost records. You have the cost records. So first you have the acceptance of public deposits. Then next one, see cost records. So cost records, whether they are made and maintained. Then USD and DSD, clause 7. USD is all about what you can say undisputed statutory dues and disputed statutory dues under income tax, sales tax, service tax, GST, excise, PF, ESI. So disputed statutory dues, undisputed statutory dues. And then any unrecorded income or unrecorded transaction under the Income Tax Act, even that is also captured. So accurate are repayment of loans and borrowing. So here, whether the term loan is being used for the purpose for which it has been borrowed, whether short-term loan is applied for long-term purposes here, whether the company has pledged the securities of SAG, subsidiary associates joint venture, whether the company has borrowed any money to meet out the liabilities of SAG. That is what it is actually, a repayment. And whether repayment of loans and borrowings is done within a reasonable time, whether any default is there, that you have to report. Okay. Then, my dear soldiers, you have A, accurate, RA, application of IPO, FPO, PP. Now, what is this IPO? Initial public offer, further public offer, private placement, and preferential allotment. So, application of IPO, FPO, preferential allotment, and private placement. Basically, when you're raising all this money, are you utilizing this money in a proper manner or not? Whether the money is properly utilized. Because in the prospectus, you will clearly mention that what is the objective for which you're raising the money by way of IPO, further public offer, private placement, or preferential allotment. This money I am raising to repay my loan, to reduce my liability, or to make investment in another subsidiary company, or to buy out a company, or to make an investment. Then the 11th one, clause number 11, TE, the nature and amount of fraud. So nature and amount of fraud, fraud on the company and fraud by the company. That is what it is highlighted here. So the first principle is PIL. Okay, PIL. Second one is accurate. Okay, accurate. AC, acceptance of deposit. C, cost records. You for two times we have to use it. One is the undisputed statutory dues and disputed statutory dues, and unrecorded income and unrecorded transaction under income tax. And R, repayment of loans and borrowings. A, application of IPO, FPO, private placement, and preferential allotment. And last one, TE, the nature and amount of fraud. So here we talk about fraud by the company or fraud on the company. That's the thing here. And then the third mnemonic you can have is NRI. NRI. First is what, my dear soldiers? It goes to PIL, accurate, then NRI. NRI is what come on Nidhi company. Now Nidhi company, they are the deposit accepting company. They accept deposit and they give loan to their members. Here the ratio of net own funds to capital should not be more than 1/20. There we also talk about the unencumbered term deposit of 10% should be maintained by Nidhi company. And is there any default in repayment of deposits or interest by the Nidhi company? That is what highlighted here. Then R, related party transaction. Related party transaction, whether there is a proper disclosure of related party transaction as per the accounting standards, we have to check. And approval of related party transaction under section 188 and 177. 177 talks about the audit committee, where audit committee gives approval for the related party transaction. And then internal audit system, I, NRI, internal audit system. Internal audit system, whether the company is having a internal audit system which is commensurate with the size of the organization, and whether the statutory auditor is using the report of the internal auditor. Okay, mind you, this is not for deep understanding of the clauses, it's more of a memory. Then next one, you can use the mnemonic NCC: pill, accurate, then you have NRI, and then now you have the NCC. NRI, my dear soldiers, I told you about the Nidhi company, the related party transaction, internal audit. Now you have NCC. Now NCC, that is what we say, non-cash transaction under section 192. Director or any person interested should not enter into any non-cash transaction with the company except for the immovable property. Then company registered under section 45 IA of the RBI Act. RBI Act is nothing but NBFC. So here you have to see that whether they have obtained a certificate of registration, whether the core investment company have complied their requirement, whether basically the company NBFC, mainly clause 16 is applicable to NBFC. Have you complied the requirement given by the RBI? Generally, what will happen? The financial assets of the NBFC should be more than 50% of total assets, and financial liability should be more than 50% of total liability. Rather, the financial income should be more than 50% of the total income, and they should obtain a certificate of registration. Clause 17, that is C, cash losses for the financial year and the previous financial year. Okay, what are they are using the word cash losses, not losses, cash losses. This is before adjusting the provisions and depreciation, whatever losses you arrive actually here, that is what is cash losses. Okay, so now the mnemonic stands at pill, accurate, then NRI, and then NCC, and non-cash transaction under 192, company registered under 45 IA of RBI Act, and C, cash losses for financial year and the previous financial year. And then, my dear soldiers, we have the last mnemonic, that is RATS. So resignation of the statutory auditor or resignation of the statutory auditor, you have to ascertain the reason. Resignation of statutory auditor. Then A here is aging, financial ratio, realization of financial assets, payment of financial liability, other income, auditor's knowledge, to be considered for whether there is any material uncertainty for the entity to realize the financial asset and settle the financial liability. Basically, this is talking about the going concern. Okay, I repeat: aging, financial ratio, realization of financial assets, payment of financial liability, other information, and the auditor's knowledge. So, is there any material uncertainty as to whether the entity will continue in the foreseeable future, whether they'll be able to settle the financial liability in the future? Okay. Next one, T, transfer of unspent amount to a fund which is recognized under Schedule 7. This is more on CSR, where 2% of the average net profit, you should use it for the purpose of CSR. If it is not spent, then within 6 months, it should be transferred to a recognized fund under Schedule 7. C, that is what it is. And last one, S, statement of cash flow statement. So any cash flow statement, not cash flow statement, consolidated financial statement. Let me use that word. Statement of consolidated financial statement. Basically, any qualified opinion or adverse opinion is given on any matters related to CARO, that has to be highlighted here. So, clause 21 is only applicable to a holding company which is preparing the CFS. Otherwise, this will not be applicable. Okay. To summarize, my dear soldiers, CARO 2020, you have PIL, accurate, NRI, NCC, RATS. This is how you can boost your memory. You can remember all the 21 clauses in the same manner you can remember. Just little practice is required, my dear soldiers, and that will do the wonders actually. Okay, fine, fantastic.
Subscribe to LearnCap and hit the bell icon to get notified.